Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. Unleashed is produced by Umbrex, which connects you with the world's top independent management consultants. And I'm your host, Will Bachman. I'm so happy to be here today with Dave Haase, who runs an accounting and bookkeeping firm out on the West Coast. He is working with 50 to 100 clients just this week, helping them with applications for the Paycheck Protection Program, part of the CARES Act passed by Congress just last week. And today, Dave is going to walk us through the whole process. Guidelines are still coming out. He's going to tell us the latest. Dave, welcome to the show.
Thanks. Great to be here.
So, Dave, first just give us the kind of the big picture view of what is the Paycheck Protection Act, what kind of businesses are eligible, and what are this? It's a loan that converts to a grant. Give us the basics.
Yeah, that's great. So there's been a lot of changes in the last few weeks, and even in the last couple of weeks, on a huge number of different tax issues. And the most relevant, probably right now, for small business owners and self-employed individuals is the Payroll Protection Program, which was approved on Friday by the Congress, and basically is part of a larger package to continue to incentivize businesses to pay payroll. And so the gist of the program is a forgivable loan. So it's a loan up front that has subsidized interest rates, 0.5% to 4%. And can be forgiven if you maintain the level of payroll that you had before the disaster. So there's no hardship that needs to be proven to apply for the loan. What they're looking at is really just how much payroll you had last year, and they're comparing it to a period during this year. And if you were, maintained your payroll and didn't lay anybody off or reduce it by up to 25%, then you get that full loan forgiven, and it's not income. So that is the very short kind of Cliff Notes version of the Payroll Protection Program.
Okay, fantastic. So understanding that it sounds like the final guidelines still have not been issued. Walk us through the process of what materials we need to gather and what's the process to apply for one of these loans? Do you do it with the SBA? Do you do it with the bank? How do you go about applying for one of these loans?
Yeah, so this is actually going to be processed through private lenders. The SBA right now is really overwhelmed with disaster loan applications. And so there's been a million changes since Friday. And as you can imagine, with, you're like the entire IRS and probably most of the Treasury Department working from home, and most of the banks, it has been difficult to get really good information. So it's still coming out right now. And, but I can give you basically what we're thinking at this point, although this literally may change tomorrow. And I will say that's one very important recommendation for folks. If you're looking for information, make sure you're sorting based on the last day, essentially, is what I've been doing for the last week or so, because I had things that came out this weekend. I sent a big, note to my clients, and it was all out of date by like Monday morning, which was frustrating. But basically what we know as of yesterday afternoon is we got an initial draft application form for the payroll protection loans. And basically this was issued by the Treasury Department. It's given to banks because, again, like your private lenders are the ones who are going to be processing those loans. And what that means is that Wells Fargo, Chase, whoever you might use for your business banking is probably where I would begin. I know that Wells Fargo and Chase both have programs in place, and they both, Wells Fargo gave the draft application out yesterday. They didn't have an application form to fill out online. This was just informational so that people could begin to prepare. And Chase yesterday kind of gave the process that they're going to use. And the small banks are working on this as well. I just used the big examples because I know you've got folks all over the place. But those private lenders will be processing the loans. They don't have to wait for SBA approval. They've really tried to strip out qualifications for the loans to make it fast. They want to get money into the economy as quickly as possible. And so, you may be surprised who qualifies for these loans. Like, I run an accounting business and I expect to see a revenue slowdown. We haven't yet versus last year, and yet we qualify for this. And so, I'm telling our business owners to be as conservative as possible, knowing that we don't know how long this disruption will last, and to go get, capital for the worst case scenarios. And I think this is going to be a no-brainer for folks. So you're going to apply through your private bank. There is a draft application out that I'm sure we'll find some way to share that with folks. There's one on the Treasury website.
Yeah,
and essentially
I'll just jump in there, Dave. We will include a link in the show notes. So listeners, you can check the show notes to get that draft application.
Perfect. And so the formula is pretty easy. So basically, and this is the important part where the nuances are, it's only a few page form. And it asks for your average payroll. And there's a few different things that that you should know are included there. So I'll start. There's a few different scenarios that, unfortunately, tax law is just, really, really complex. So I'll try not to go too far down the rabbit hole in terms of the exceptions, but I'll give you the general gist of it. So payroll, as they define it, includes benefits, which can be retirement benefits as well as healthcare benefits. And so that's something to be aware of. Make sure you're including those things that can bump the number significantly. And essentially, they just ask you for a payroll amount. And then on average across 2019 is the default formula that they want you to use. And then you're going to multiply that by 2.5, and that is the maximum loan amount. And that's also the maximum forgiveness amount if you were to keep folks on payroll. A couple nuances here. You do have to exempt folks that make over $100,000. So I know for some of your consultants that may be particularly impactful.
Just a question there. I've heard different things on that. So my understanding is, when you say exempt folks, my understanding is that the first $100,000 qualifies. So if someone earns $105,000, you could count $100,000 against the amount.
Yeah, I think that's correct. I'm not 100% sure because I haven't seen that yet in writing, and on the application form that you guys will see, it's not called out clearly. So that is a very important question to ask your bank. And my bias generally is to include the amounts, and as opposed to like cutting them out.
It would be strange if
issues with your bank.
It would be very strange if someone earning $99,000, $99K would qualify. But then if they earn $101,000, like zero qualifies. I certainly hope that that's not the case, and that would be kind of bizarre if they do it the rules that way.
We could have a follow-up on bizarre tax rules, but yes, this would go on that list. And there is a long list of bizarre tax rules. But yeah, I mean, I just don't want to make any assumptions because we're still figuring out exactly what the rules are. But so I'll just call that out as like, I don't totally know the answer to that yet, but I would include it right now in people's applications and have the bank strip it out.
Yeah. And then we also want to point out here, just make it clear that independent consultants and gig workers and self-employed, a lot of the listeners of this show who run their own practice are included, right? So for us, we don't issue, most of us maybe have an LLC, we don't have a payroll report. My understanding is that basically the net earnings after expenses, so if you have an LLC, basically what you paid yourself, that counts as payroll. Is that correct?
Yeah, that's right. And I don't know if you noticed this on the application form, but it really did not talk at all about self-employed individuals or guaranteed payments, which, is part of the structure of an LLC. The one thing I will say is if people have an S Corp and they pay themselves salary, then that is pretty straightforward. But even if you have an S Corp and you have distributions that are not salary, which would kind of be in that bucket that you're talking about of your total take-home pay, regardless of whether it's a distribution or a self-employed individual, just literally putting money in their bank accounts, or if it's an LLC where you have a mix of guaranteed payments and profits, regardless, that is a very important question to ask for folks. And it does, the initial bill said that it would include self-employed individuals. And I haven't seen on the application form any place, the application specifically called out payroll. So I'm expecting to see more information on that. But yes, the bill did seem to read that way. The application itself right now is a little bit inconsistent with that, but I expect to see some clarification pretty soon on that.
Okay, and just as a clarification, you mentioned for LLCs, guaranteed distributions and so forth. That may apply to certain LLCs, maybe with multiple members, but for a lot of listeners of this show who have a sole member LLC, we don't have guaranteed distributions. It's just, people will often pay themselves, when they feel like it or when they can, to their personal account. But you don't necessarily, just because you have an LLC doesn't mean you guaranteed have to have a guaranteed distribution, right?
That's right. Yeah, single member LLC would not have to have that.
Yeah. And also even multiple member LLCs do not necessarily have to have guaranteed distributions. They may have put it into their owner's agreement, but they don't necessarily have to have them.
Yes and no. That would be another podcast. But you are supposed to have guaranteed payments if you have profit. But
if you have profit,
but if that's it's a complicated tax topic. But yeah, that's generally right.
All right. Okay. So you say we'll take a look at this draft. There's the draft application form. What have you seen in terms of can you list out like the major banks that you're aware of? You mentioned Wells Fargo and Chase. Mm-hmm. Basically all the major national banks because my understanding is they have to be already an approved SBA 7A lender. So would that include like Bank of America and what other big banks?
Yeah, there's a list on the website, the SBA website of lenders, and it does include all the major banks that people think of. It probably includes a lot of the regional banks as well. I've seen notes from some of those folks, but they do have to be 7A lenders. So that will eliminate some regional banks. But I know that the major, Bank of America, Wells Fargo, Chase, those guys, I've seen communications already about this program. So I know that they're all involved, and you may not have to be a customer or client of that bank in order to participate. But I do know that Chase was giving priority to some of their folks. So I would start with a bank that you work with and see if they are a 7A lender, or ask them if they're doing these types of loans. And then if you need a larger list, there's one on the SBA website.
Oh, that's good to know. So you're saying that some banks may give priority to their current customers. That's what Chase said they were going to do.
Yeah. Which makes sense to me. There's going to be an onslaught. I mean, there's $300 billion as part of this bill for these loans. And so you can imagine the number of applications that folks are going to get. The SBA website yesterday said, please try applying during off-peak hours. So there's just going to be, a deluge of new applications and applicants here. Yeah. So I would start with the bank that you work with if you can.
Okay. But again, you're not going to apply for this at the SBA site. You're going to apply directly to your bank. So you need to find out what your bank's process is.
Exactly. Yeah, there is no application form on the SBA website. It's going to be processed through the private lenders. That's not true for the disaster loans. That's just for the payroll protection program.
All right, maybe good. And after we talk about the PPP, we could get into the disaster loans a little bit, separate program. Mm-hmm. So, all right, so people apply for what documents do we need to start gathering to support our application? What are we going to need to get together?
Yeah, so I would start going through your payroll records and I'd pull them essentially by month for 2019. And there's a reason for that, which is that you can elect to use different time frames. So for new businesses that didn't exist in 2019, there's a different formula where you can use, I think it's January and February wages of 2020. For most people, they want you to use an average of all of 2019. But you're still going to want essentially payroll. You want your other benefits, so your retirement benefits that were paid in 2019, your medical benefits that were paid in 2019. I have heard it said that some people are opening a checking account so they can have an audit trail when they get this capital to ensure that they're paying for things that are forgivable, basically as part of the loan. The loan kind of has some limitations on how you can use the loan for utilities and rent and payroll and things like that. So I would potentially consider doing that if that's something that's important in terms of an audit trail for a client. But right now, it's really going to be those payroll records, and I would go ahead and pull like your balance sheet and your financial statements for probably the last few years. So what will often happen in these scenarios is your private lenders will have their own kind of qualification processes, and they may ask for different documents. But for sure, you're going to need a lot of information about your payroll. So you're going to want to see if you're an independent contractor, for example, like this is a totally different flow because you may not have payroll that you can pull from Gusto or ADP, whoever it might be. But for everybody else, I would take payroll. You want it by employee because of the exemption over 100,000, and you want it by month probably, so you can actually do an assessment of, you may have paid, like I pay tax season bonuses, and it's during one of the windows, so I'll elect to use the February to June window because it's actually ends up being like $20,000 different. So you may want to look at it by month to make some assessments of the best possible application process for you. And then just quickly on the self-employed individuals or people that have LLCs, a similar process. You're not going to have payroll reports. It won't be as clean. There's probably going to be a little bit more work in substantiating what your distributions were from your business. And my guess is in these scenarios, and it's really just a guess right now because we don't know what the application process looks like, they're probably going to use your tax returns for that. A lot of these folks are, and I'm one of them basically, are like writing yourself a check whenever you have the cash in the bank or whenever you need money, maybe paying rent or something like that. And so you may have inconsistent distributions. And my guess is they'll go back to the tax returns to show what your final self-employed income was, for example, on your Schedule C, or if it can flow up in different ways to your tax return based on your structure. But for sure, you're going to want to pull the last couple of years of tax returns and profit and loss statements and your balance sheet if you've got those.
All right. Now you mentioned that they want you to pull all of the months in 2019. It sounds like you obviously know this better than I do. I'd heard a couple different things. I thought that I had seen somewhere where it's going to be not necessarily 2019, but like trailing 12 months. So if you apply here on, like April 1st, they would look at April 2019 through March 2020 or something like that. But maybe I heard wrong before. So you're saying...
Yeah, the form I saw was an average of 2019. Okay. So, it's possible. There are actually, this is one area where there's a number of different exceptions. So there's exceptions on two fronts. One is the number you use for the average payroll. And if you have variances between, exactly like you were saying, if the trailing 12 is going to be different than the average 12 for 2019, or if you have seasonality and the February to June window is going to be different than the rest of the year, then I would encourage you to spend a little more time making sure that you're looking at those options, because there are some exceptional kind of time rules that you can apply. And the other piece is that for folks, if you're working with small businesses or even mid-sized businesses that may have already done some layoffs, there's also, so part of the forgiveness is keeping people on payroll, but there is for restaurants, for example, when you close the loan, you have 8 weeks to hire people back. There is actually a window there for you to scale back up. So for example, I work with a number of restaurants in San Francisco that are relatively, closed at this point. And they do have 8 weeks to hire people back on. I haven't seen like the exhausting detail of what that means, but basically it's 8 weeks from the time that you close the loan. So there may be businesses where that 8 week period is really important. And one of the things I'm talking about with my restaurants is maybe get approved for the loan and sit and wait, basically, so that that we're going to be open again, or that you can be open again, because you've got to hire people back. Your forgiveness is determined basically 8 weeks post closing the loan. So
a couple questions there. One is, $349 billion was approved for this. Thank you, Congress.
Yep.
But I've seen some speculation that that's not nearly enough. So, and that might be sort of first come, first served. So you said sit on it, but what's the concern that if you sit on it, that they may just run out of funds and say, hey, sorry, tough luck, you're approved, but there's no longer funds?
Yeah, so what I mean by sit on it is go ahead and apply. I'm telling so we've got about 300 business clients total, and I'm telling all of them to drop what they're doing and assess this program immediately, because it's, maybe hopefully the only time in our lifetime where you've got something truly exceptional and the government stepping in and basically giving money to businesses that are, can be a really significant amount of money, six figures or even, potentially seven for a few of my clients, and completely forgiven and not counted as income. I mean, I don't know. We never really foresaw this type of scenario, but so what I mean is go ahead and apply, get it approved, right, and then wait if you needed to as long as you can. But we obviously are going to be tracking the news daily. I do think there is some risk that the banks are going to be really overwhelmed with applications for this program, and there's also a risk that they may run out of funding for this, and I'm not really sure what would happen in that scenario. But I would encourage folks to act quickly, because I think even if you look at the SBA, like this weekend, I applied for some clients. And then by Monday morning, they had a completely new application process. By Tuesday, they were announcing that they were way behind on applications and that their site was crashing, and not to worry about it, but to try using it during off-peak hours. There's obviously a great deal of demand, and there's a lot of businesses that are going to be really interested in this. So I definitely would encourage folks to this may be I'm telling even some of my clients, you may apply at multiple banks to see who can get through the process the quickest.
I was going to ask you about that, actually.
Yeah.
So that's kosher. You can go ahead and apply to more than one bank, and then let's say that you get approved at two. You could obviously only pick one of them, but it is okay. Yep. Then, like, it's not like they say, oh, well, you've already applied to Chase, you can't apply here at Bank of America or whatever. You can apply to more than one bank.
I think you can apply at multiple places. Think of this like a mortgage, right? You're welcome to shop out different banks, and there's no harm in doing that. I think my guess is that it may be hard to get to the finish line with multiple banks, meaning that, like, I think it's going to take, I don't know how the banks are possibly going to process it. They didn't have departments set up, right? You think about their 7A loan department is probably, even in a huge bank, maybe a few hundred people or something, and they might have 100,000 applications this week. So I don't know how they're possibly going to process all of these. My recommendation is get in the minute something opens up, you want to get in. And I told all my clients, like, the minute I see any sort of private lender put an application form up, I'm going to have all my clients apply there. And then when their bank opens, they should apply there as well.
Okay. So try to be first in line and get all your ducks in a row and all your materials gathered with this draft application, like, immediately, so that as soon as anybody is accepting it, it's like buying some concert tickets or something.
Totally.
And then, I've heard some confusing stuff around the loan forgiveness. So, and you alluded to it earlier. So it's if you hire the people back by the 8-week point. So let's say that you're a restaurant and you had to lay off everyone, unfortunately. So you get a loan, and let's say that just to keep the numbers simple, let's say that your average monthly payroll was $100, just for round numbers, just for a hypothetical, and you laid off everyone, and maybe you had 10 people. And so is it the extreme case that if on the last day of the 8th week you hired all 10 people back and they were just there for just that one day, then they'd say, okay, on 8 weeks you have 10 people back, it's 100% forgiven? Or is it also based, so is it, I heard that it was based pro rata both on head count, but also on the amount of salary that you paid. And if there was more than a 25% reduction in the salary you paid, there was some reduction in the loan forgiveness as well. So could you talk a little bit more about how you expect that to be calculated?
Yeah, I mean, I've heard all the same things that you just mentioned, right? And that's not a formula that I can understand, meaning that there is going to be an extreme amount of detail coming out about that. Like as they passed the bill, they actually gave themselves 30 days to clarify different points in the bill. So those are some of the things that are still, it's unusual to pass a bill and be like, oh, by the way, we'll give you all the details at some point in the next 30 days, but start sending out money right now. I've never really seen that before, but you know, I've heard the same things. I think there was going to be some combination of the number of FTEs, which even that term, like full-time employees, is kind of an interesting one, right, for restaurants and things like that. And there's also going to be a factor for the total amount, like dollar amount of payroll. Um, it's really not clear. And you know, the same thing is true. I thought the same thing of like, hey, maybe you could hire everyone back on the day of the 8 weeks. You know, for restaurants that may not be open. I don't expect San Francisco to have fully functioning restaurants here in 8 weeks and a bunch of people, you know, banging on the doors to get into them. But you know, I think the prudent thing is to take the loan now, to wait for the details to come out on that, and to make a plan once we have better details. Like, we don't even have the application details at this point, let alone the forgiveness formula. So, but I've heard all the same things you did. It's going to be some combination of those things. The 8 week period was in the bill. For me right now, I'm trying to gather capital, and basically I will evaluate staffing decisions differently in the next 8 weeks. And I think every business owner should be doing that. One, go get capital if you can get capital and have a need for capital. Or frankly, if it's a forgivable loan, even if you don't have a need for capital, I mean, that's what I would say to my clients is, you know, that even though I understand the ethical pieces of this whole thing, right? It's like, look, if you have some sort of interruption, you should get as much capital as you can as a business owner, and you can make those decisions as you go through it. But for sure, for me, for the next 8 weeks, I'm going to try to keep everything pretty similar to last year. I mean, we're in the middle of tax season, so we have a unique situation where we still have revenue coming in, but I will evaluate those decisions differently because of the limitations on the forgiveness of these, an expectation of getting one of these loans.
Yeah. And since the rules aren't out, you may not be able to answer this one, but you know, I've heard some people ask me, hey, in terms of the number of employees, what if I hire different employees? So if it's not the same names, does it still count? So if a small business, let's say with 10 employees, they had to lay them all off, they go back and they hire 10 different names and at the same salary, then would that still count for the loan forgiveness?
It should. Yeah, I haven't seen that as a limitation on anything.
Okay.
So it you know, it's possible that does sneak its way in there at the end, but I haven't heard of that on anything that I've seen as a limitation.
All right. So it's not a name based, it's just a number based and salary based.
Yep.
Okay. Let's talk a little bit about the Small Business Administration Economic Injury Disaster Loan, or SBA EIDL. That's a different program. Tell me what that's all about. I don't really understand how that works. Walk me through that one.
Yeah, I didn't either until about a week ago. But so that is a loan program that has been in existence for some period of time that basically the SBA helps out by funding small businesses in times of, you know, disruption. And it's a loan program that you apply for through the SBA. So there is a great form that they uploaded Monday morning and then changed Tuesday morning that is really streamlined in terms of application. It takes like 15 minutes. And essentially those loans are for businesses that have been closed because of coronavirus for the most part, or shelter in place, and businesses that have seen a revenue decline. And so they can be for up to, I believe, 2 million is the limit on those loans, and they have subsidized interest rates. I think 4% is the top interest rate. And they can be long-term loans. I think 30 years is the longest loan period that you can have under that program. And so what's interesting to me is I don't see a really clear formula for how they're going to calculate the amount of money that they give to those individual businesses. But I'm going through it with a lot of clients right now. We've put in a lot of those applications this week, and we should know more shortly. The one thing that they did change last week is they gave a $10,000 advance on those loans that they said would be processed within 3 days, although I haven't seen it yet, and we started applying on Saturday, maybe 3 business days. But basically you can check a box there that says, yes, I want a $10,000 advance on this loan. And if you don't get approved for a loan, that $10,000 is essentially becomes a grant. So that's good to know about. I have told a number of folks to go ahead and apply there and check the box for the $10,000. That's supposed to be processed within 3 days, and then we'll know more about the process there as we go along. But I will say for the initial form, people really, if you just need to know your like social security, the date you started your business, what type of business you are, and your EIN if you're a multi-member LLC or an S corp, and your total revenue for the rolling 12 months through February 1st, and your total cost of goods sold. So that they're going to use those to kind of calculate the loan. And initially, what they'll probably ask for as a follow-up, because this was there Sunday and then it disappeared on Monday, is a personal financial statement. That takes a little bit of time to fill out. If you have any sort of investment accounts, you have to pull like all the details on those accounts, and authorization to go look at your tax files. So there's a few different forms that you're probably going to have to fill out during that process. But the initial application process is very quick. And you go ahead and you load in like your bank information so they can transfer the $10,000. And I expect to see those start to come through in the next few days, which should be some really much needed capital for some of these small businesses.
Okay. So when you apply for one of these, do you request a specific amount of money, or you just apply and then they'll decide how much they want to loan you?
Yeah, it's the latter.
Okay.
So it's based on need that you can qualify. So I haven't gone, end to end on one of these yet, but basically the initial application doesn't ask you about, decline in revenue or any of those things. It just asks you for revenue and COGS, and then it asks you what type of business you are, and it makes sure that you're not a number of different businesses that are exempted. And then I would expect as a follow-up, they're going to ask for, did you have a decline in revenue? How long is that going to last? And they'll qualify it based on those factors.
Oh, okay. You don't need to go the whole list, but like, what are some examples of exempted businesses that cannot apply?
Yeah, so let me think about this. Okay. So there were some exemptions for like churches and political organizations, the typical things that you see that are exempted from nonprofits, that are sometimes exempted from nonprofits. There were exemptions for, let me think about this, businesses that had like foreign owners, anyone with like a felony or a criminal charge of any sort. There was an exemption for porn businesses, like online porn, which I was laughing. I was like, if I had more time this week, I would love to understand this limitation. But I did not, unfortunately, but it did make me laugh. Businesses like that. So the things you would expect, but any sort of like professional service business, those things would qualify.
Okay. So applying for these loans. So at some point and then my understanding is you cannot get an economic injury disaster loan and the Paycheck Protection Program for the same thing, but that you can apply for both as long as you're using them for like separate purposes.
Yeah, that's right. So there's you can apply for both, and they both have requirements on what you can use the loan for. And so you will have to have discrete expenses for the two different, the two different kind of cash infusions that you may receive as part of those loans. So yeah, that's something to keep in mind. I do think, because of the limitations on kind of the payroll protection program, if you were to keep your payroll in place, my guess is just with the inclusion of like rent and utilities and some of those other things, that you may use more capital. I don't think spending capital is going to be the problem in this case, but for most of my clients anyway, because if you include some of these other expenses that could be included in either kind of cash infusion as a permittable expense, and you keep your payroll for the most part whole, I don't think it's going to be hard to spend the money on things that are qualified.
Okay. All right. So let's see. And so with these, you apply directly to the Small Business Administration, not through your bank. You'd give them your bank details so they would deposit the money in your bank. And this one, again, is a loan. This is not one of these nice forgivable things. So you would actually pay this back.
Exactly. That's right. It's not forgivable. The $10,000 is forgivable if you don't get approved for a loan. But it is not forgivable. And so it's a truly, a debt decision with all the things that come along with that. And I do think that's something to consider in all of this is even with the forgiveness program for the payroll protection loans. There is some risk and kind of how they define this thing in terms of forgiveness, that there's a limitation that we did not foresee. And so I am telling people to have a bit of caution when they do this, but at the very least, it's a really, really low interest rate loan. And I do think if you go through the qualifications that we know about, there's a very good chance that a lot of it or all of it will be forgiven for the payroll protection program. But for the disaster loans, it is truly just a loan that it has a subsidized interest rate. So I think 2.7 to 4 is what they quoted on that, which is a pretty good use of capital. So for example, for my business, I'll probably take that and pay off some of my line of credit. So if I needed to pull the money back out, I could very quickly and shift money to kind of a lower interest rate, lever, if you will, for my business. So I would keep some of that, as liquid as you can, knowing you are going to have to pay it back at some point.
All right. Could you tell us about any other, these are federal programs, any other city or state-run programs? I think you're out in San Francisco, so that people should also be thinking about. In New York City, I know that the Department of Small Business Services has some product. But what other products should people be looking at for city, state, or maybe even private grants and so forth that are available?
Yeah, so looking more broadly, there are a lot of other things going on. It's funny, last year we had the Tax Cuts and Jobs Act, and I swore that, this was like the time in our career as tax professionals where we would see more change than we'd ever seen in 50 years of tax code. And this year has been actually, about the same, which is remarkable. There are so many things available. So California, San Francisco, New York, there are a bunch of states now and even cities that are providing loans for the most part, low interest rate loans for small businesses that operate in their city or state. In addition, there's been a lot of federal tax law changes. So for a few that I'll kind of quickly highlight, the tax filing deadline's pushed back to July 15th. That includes any payments that are due with your tax returns. It also includes any payments, any estimated payments that you might be making during that time. Most of the states, like nearly all the states, have matched that timeline for July 15th and a waiver on interest and penalties for payments that are due, as well as estimates. So one of the things I've told a number of consulting clients is, hold your estimated payments for now. Just keep them handy if you want to have more capital on hand in case you see like a consulting contract come to an early end. So that's a piece of advice we've given folks. There are other, mostly loan options at the local level. At least I speak mostly from, California experience. Most of those are not forgivable. A number of these cities and states are losing a lot of tax revenue right now. But the name of the game is to really keep the capital in your business. And for that reason, I think delaying some of those tax payments, you may still finish your tax return and understand what you owe. I always think it's better to have that information early on rather than later. There's also there's like a tax credit that they're going to be issuing advanced checks against. It's a strange structure, but that's what the $1,200 checks are that you heard about. Those are for folks that are under 75,000 of AGI, adjusted gross income, if they're single, and 150 if they're married. You may have some folks in that camp, and there's also $500 per child. There's a phase out for those. We're having to work through. We don't have that many clients that are in that income range, but we're working through with some of those folks, like whether or not they file their 2019 tax returns, because some of them may have a different income number on 18 versus 19. So there's a lot of other issues going on right now. There are some local counties that are delaying property tax payments, which I think are due April 10th, at least in California. I know they're all due April 10th, and they're starting to talk about pushing those back. So there's a lot going on. And I think the one thing I'd recommend for folks is if you're looking for more information about that, just make sure you're looking at, very recent information, because it's all changing by the day, basically, at this point.
All right. All right, Dave, look, this has been incredibly helpful and bringing us up to speed. If folks wanted to reach out to you, follow up, I imagine that you're pretty busy serving your existing client base, but if folks wanted to reach out to you, you feel free to give a website or email or whatever contact
Yeah.
info.
Yeah, my email is dave@peninsulaaccounting.com. And that's our website as well, peninsulaaccounting.com. We work with folks all over the US, mostly in California and the Bay Area, but we're happy to help. I mean, I'm spending most of my week. Unfortunately, it is still tax season, kind of, but I'm really spending most of my week with businesses that need capital. And so I do have some availability. We've kind of prioritized folks that are getting refunds and folks that are dealing with layoffs or need capital infusions as quickly as possible. And so we're making time for that. I think actually a lot of my staff will probably pull off tax returns this week. If it's something that you need, you got to press forward as fast as you can. But realize that basically every one of my businesses, for the most part, will want to at least assess whether or not they qualify for these loans. And so it's certainly a time where we're dedicating all of our resources we can towards this, and I assume most accounting professionals will. But if that's a holdup for you, then find a way to get it done anyways.
All right, great. This was incredibly helpful, Dave. Thanks for giving us the latest on this. And again, it's evolving rapidly. So as Dave suggests, only look at sort of the most recent day of news on this. Wanted to also mention, if you're a small business, Umbrex has a program where we're offering pro bono support to small businesses. So Umbrex consultants, we have over 100 volunteers who have agreed to advise small businesses, help them understand these processes, give some advice. We have a one-page checklist to help you as a small business come up with a plan to how you want to react to the pandemic. To find all that, to either request support, if you're a consultant and want to volunteer, or to get all that info, visit umbrex.com. That's umbrex.com, and click on the Pandemic Playbook link on the top right. That'll get you to our kind of mini site where we have all the latest and greatest, including upcoming coronavirus-related events and seminars. We have a page for that. So if you're looking for help, that's a place to sign up. Dave, thank you so much for joining. This was incredibly helpful.
Yeah, thank you. Appreciate it. If there's any other follow-ups, just let me know.
All right, great. Okay, we can